Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Comcast Corporation Annual Report. Comcast Corporation is a global media and technology company that operates through various segments to provide a wide range of services and businesses. The company's residential connectivity and platforms segment offers residential broadband and wireless connectivity services, video services, entertainment television networks, and advertising. In addition to its residential services, Comcast also provides business services connectivity, which includes broadband, wireline voice, and wireless services for small business locations, as well as Ethernet network services for medium-sized customers and larger enterprises. The company's media segment operates NBC Universal's national and regional cable networks, the NBC and Telemundo broadcast networks, and owned local broadcast television stations. Comcast also offers a direct-to-consumer streaming service called Peacock, as well as international television networks, including Sky Sports Networks. Its studios segment is responsible for film and television studio production and distribution operations, while its theme parks segment operates Universal theme parks in various locations around the world. Furthermore, Comcast provides consolidated streaming platforms under Xumo and offers services through the Philadelphia Flyers and the Xfinity Mobile Arena in Philadelphia, Pennsylvania. With a rich history dating back to 1963, Comcast Corporation has established itself as a leading media and technology company with a diverse range of businesses and services. Der Aktienkurs von Comcast Corp., CMCSA, blieb im Vergangenen Jahr stable oder entwickelt sich positiv, obwohl es mehrere Nachrichten gab. Die Ergebnis des zweiten Quartals 2025 übertrafen die Erwartungen bei Umsatz und Gewinn, was zu einer positiven Reaktion des Markts führt. Die erfolgreiche Eröffnung des Universal Epic Universe im Mai 2025 wurde ebenfalls als positiver Treiber für die Einnahmen der Themenparks und die Gesamtleistung des Unternehmens hervorgehoben. Die Einführung neuer Xfinity Internetplan und Angebot im Juni 2025 zielt darauf ab, die Kundenbindung und des Wachstums zu verbessern. Die Ergebnis des dritten Quartals 2025 stiegen unmittelbar nach der Veröffentlichung 471%. Biava Securities stuffed die Aktie von Comcast von neutral auf Kauf und Hock, was den Kurs selben Tag 243% steigen ließ. Die Abspaltung der Versant Media Group im Januar 2026 führte zu einer Veränderung des Aktienkurses von -252%. Die jedoch innerhalb der Schwelle von nicht signifikanten Änderungen über -259% lag. Die Ergebnis des vierten Quartals 2025 übertrafen die EPS-Erwartungen leicht, verfehlten aber den Umsatz. Der Aktienkurs stieg 29. Januar 2026 292%, unverändert sich 3. Februar 2026 -54%. Insgesamt blieb der Aktienkurs von Comcast Corp. Im Vergangenen Jahr stable oder entwickelt sich positiv. Comcast Corporation market capitalization of $117 billion is significantly larger than the average industry peer of roughly $4 billion. This shows that Comcast Corporation holds a significant advantage in their industry. Comcast Corporation trades at a lower price-to-earnings ratio of 6 times and a lower price-to-book ratio of 1.12 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. The leverage on the balance sheet appears elevated, with liabilities of 68% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has aggressively reduced its share count by more than 5%, indicating a strong shareholder-focused capital allocation approach. The company have a dividend yield of 4.44%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for a company can be identified through an analysis of its financial reports. According to the extracted summaries, the residential connectivity and platform segment has been a significant contributor to revenue growth, with a notable increase of $70.6 billion from the previous year. This is followed by business services, which saw a growth of $10.2 billion, and media, which experienced an increase of $22.1 billion. The studios segment also reported a substantial growth of $8.1 billion. These segments have been driving revenue growth for the company, indicating strong performance in these areas. On the other hand, the theme park segment has seen a decline in revenue, with a decrease of $9.8 million from the previous year. This suggests that the company may need to reassess its strategy and operations in this area to improve performance. Overall, the residential connectivity and platform segment is the primary driver of revenue growth for the company. The company's financial performance indicates a strong ability to generate positive operating cash flow. The net cash provided by operating activities has increased significantly from the previous year, reaching $33.6 billion. This substantial increase suggests that the company is efficiently managing its operations and generating sufficient cash to meet its financial obligations. Furthermore, the company's cash and cash equivalents have reached a total of $14.8 billion, providing a solid foundation for future investments and growth. Additionally, the acquisition of property and equipment and intangible assets worth $1.9 billion indicates a positive inflow of cash, reinforcing the notion that the company is generating sufficient operating cash flow to invest in its business. Overall, these indicators suggest that the company is on a stable financial footing, with a strong ability to generate positive operating cash flow. This bodes well for future growth and development, as the company will be able to meet its financial obligations while continuing to invest in its operations. The company's debt level has remained relatively consistent, with a total debt of $123.6 billion reported on page 12. However, there is no additional information provided to indicate any significant changes in this metric. In terms of interest expenses, it appears that they have had an impact on the company's net income, although they are not explicitly mentioned as a specific figure. This suggests that while interest expenses may be a concern for the company, their exact magnitude is unclear. The company's ability to generate cash from its operations and invest in capital expenditures has also been reported, with $33.6 billion provided by operating activities and $11.7 billion spent on capital expenditures on page 7. Comcast's recent financial performance reveals mixed results across its various segments. On the positive side, cable communications and NBC Universal have shown significant growth, with revenue increases of 8% to $73.6 billion and 5% to $59.9 billion respectively. This suggests that Comcast's core cable business remains strong, as well as its media arm. In contrast, Sky, a segment acquired by Comcast in 2018, has struggled, with revenue declining by 10% to $1.1 billion. While this may be attributed to various factors such as market conditions or operational challenges, it is clear that Sky's performance has not kept pace with the rest of the company. Overall, while some segments have performed well, others have underperformed, highlighting the need for Comcast to address any underlying issues and optimize its business strategy. Management's outlook for the company is optimistic, driven by several key strategies. The separation of Versant into an independent, publicly traded company has been completed, paving the way for further expansion. Revenue growth is expected to be fueled by the continued expansion of cable and wireless businesses, as well as the growth of streaming services. In addition to these business drivers, management is also focused on investing in new technologies and initiatives that will enhance customer experience and drive long-term growth. This investment in innovation is seen as a key component of the company's strategy for sustained success. Overall, management's vision for the company is one of continued growth and expansion through strategic investments and technological advancements. Comcast's dividend and share buyback activities. Comcast has a history of paying dividends to its shareholders. In 2025, the company paid out $4.89 billion in dividends, with each common share receiving $1.32 per year. This is an increase from previous years, where the dividend per share was $1.24 in 2024 and $1.16 in 2023. In addition to paying dividends, Comcast has also been actively buying back its own shares. In 2026, the company repurchased a total of 56 million shares at an average price of $35.94 per share. This is part of the company's ongoing effort to return value to its shareholders through share buybacks. Overall, Comcast's dividend and share buyback activities demonstrate the company's commitment to rewarding its investors and maintaining a strong financial position. That concludes the financial summary for Comcast Corporation. Feel free to comment below, and I will be happy to answer them when possible.